Welcome to the final countdown to blockchain's most disruptive event in history. I'm your host, Priya Kosovo. Thank you for being here. This webinar is for both those who are new to crypto and its underlying technology, the blockchain, as well as those who have some experience with this but need to know about this tech revolution I'm about sharing with you. At the end of this webinar, my goal is to provide you with solid information and an actual plan, enough to get you to take the right decision and actions that can position you for a generational wealth transformation. We're going to talk about cryptocurrencies and the blockchain, the mega event that is about to happen, and how it will impact our world, and also try to make sense of the opportunities that this event will unlock. I'll urge you to get a pen and paper and avoid every form of distraction, as I'll be giving out a lot of nuggets during the course of this webinar. Once again, you're all welcome. Now, a little about myself. My journey into the crypto world started in about 2017. I can't remember exactly how it all started, but I believe my involvement in forex trading must have exposed me to this revolutionary technology. I didn't know at the time that it would be so revolutionary. I just knew that, getting involved in crypto, I could make some money. That was all I knew. And as I could recall, it was about the same time I discovered an awakening for entrepreneurship and for investments. And without proper guidance, I plunged head on into the crypto world. It wasn't long before I realized that the crypto world is the wild, wild west. I did not say that I lost a lot of money, a lot. Now, losing money at the time was both a good thing and a bad thing for me. It was bad because I lost money. But on the flip side, it made me seek knowledge of how things work in this wild west. So the money I lost was my tuition. And like always, if you want to really understand and be grounded in how things work, you cannot bypass the process. So it was the learning, period for me. But you see, not everybody have the time to go through the nitty-gritty of how things work. Some just want to know about the opportunity and take advantage of the opportunities. So this webinar is made for, such kind of people also. I'll be bringing a lot of resources that will provide, this kind of people with information, get towards helping them, through this terrain so that they don't plunge in unguided like I did. It will help them to minimize losses and shorten the time for them to break even. Now, without further ado, let me go straight into what we have today to discuss. See, we are on the brink of a new technology sweeping the entire globe with the ability to change our lives, economy, and the world. You see, but with every new technology, the adoption goes through a path known as the adoption life cycle. It starts with the innovators who conceive the ideas and put in the work to bring the ideas into reality. Or sometimes other innovators who recognize this innovation and key into it. And then they begin to look for people who believe in the technology, who then become early users of this technology. These are the early adopters of the technology. And this class of people, this category, make up just about 13.5%, the early adopters. This category of people bear heavy risk in believing in this technology before it goes mainstream. And that's why you can see that the early adopters and the innovators, they have the highest market share of these technologies when they go mainstream as time goes on. This phase is known as the market phase. The early adopters and the innovators, they make up the market phase. Now, the interesting thing about this phase is it is usually associated with big gains. It's usually associated with big gains, but then it also comes with big pains because you might need to wait for a very long time. And then the roller coaster that goes on with development, adoption, development, improvement, adoption, it could be very challenging on the psychology of the investor. So that is where you make the big gains, when you become an early adopter. That is the early market of the life cycle of that product or that technology. And this is where the greatest investors play. The early majority, the late majority, and the laggers come in at a time. They come in at different times in the life cycle of the technology. And most times it is when it has started showing signs of success or when it has become extremely successful. That is when they come in. But from the chart on the screen, you can see that those who pay the price, the innovators, the early adopters, they get the biggest market share of that technology because they believed even when no one believed. And that is how wise investors play. They come in early, haven't studied the technology and the problems that it has come to solve. So it is wise to be early in any technology. So that's the technology adoption life cycle. And then the question is, why do people have to wait until a technology becomes successful, until when it has become, so to say, late before they come to the party? If for us to answer that question, you need to understand the nature of disruptive technology. The thing about disruptive technology is that it always has to prove itself. It always has to prove itself on outdated infrastructure designed specifically for the technology it seeks to disrupt. Think of the first cars. They have to demonstrate their value on dirty roads, made specifically for horses. This same dynamic was true of the internet. At first, they had to operate through the phone system, which was designed to carry human voices, not data. And that's where cryptocurrencies are today. Take Bitcoin, for instance. It is currently operating within the constructs of the legacy financial system. This system is centralized and slow by design. It is a system of controls and surveillance. It's a system that was designed specifically to give a few people complete control over money and the banking system. Bitcoin is awkward within this system because it is decentralized by design. It is peer-to-peer. It's open and transparent. Bitcoin doesn't just give users control over their accounts. Bitcoin makes everyone the president and CEO of their own bank. However, in order for Bitcoin to be fully functional, it must prove itself in the existing system. Right now, it is the car stuck on the dirt road. It is the weird noises coming from that thing called a modem. See, disruptive technology is always awkward at first, always. And how do you identify a technology that is disruptive? There are some characteristics that they always have. You see, when old people ignore it and academics laugh it off because they don't understand, it doesn't make sense at the time. And then, of course, the media, oh, they will always criminalize it. When you begin to see these things around the technology, you know that this technology is a disruptive technology. It has come to change the old order and to bring in a new order. And so you begin to see, friction. You begin to see people fighting it. Now, but if the technology is useful enough, people gradually gravitate to it. They usually start off on the outskirts, they look from afar. But then, gradually, adoption by users lead to development and innovation. As people begin to use it, they begin to tweak it, improve on it. Now, this improvements that is being done attracts more users. And this in turn encourages greater development and innovation. Then one day, you wake up and the world has changed. Suddenly, there are paved roads and cars everywhere. The horses are back on the farm. But now, there are also motorcycles and bicycles and skateboards and limousines. Now, these are the apps that were developed once the technology became mainstream. The apps benefit from the disruptive technology's efforts. They don't change the world necessarily, they don't change the world, but they make it wealthier and more interesting. And these apps we're talking about, they could not have come into existence until there was a market for them. The disruptive technology created that market. The disruptive technology created that market. You see, what we're seeing today is something that has played out over and over. And in the just recent past, we've seen that with the internet. If you want to understand what is going on today with crypto and blockchain, and just take a look at how the internet evolved. See, the Netscape moment changes everything. And we're waiting for that moment in crypto. We're waiting for that moment. Some believe it has happened. Some believe we're yet to, get the Netscape moment in crypto. Now, this term, Netscape Moment, refers to the 1994 launch of the web browser that opened the pathway for the explosion and massive adoption of the internet. 30 years ago, nobody was on the internet. The World Wide Web wasn't invented until 1989. Netscape, that opened the doorway, wasn't released until 1994. But today, people spend all their time on the internet. They send 3.4 million emails every single second. They do video chats with each other. They are buried on Facebook. People are Snapchatting their lives away these days. All of these have been made possible by the internet. Interestingly, the internet started off as a curious novelty. Now, human civilization would collapse if anything happened to it. If anything happened to the internet, human civilization would practically collapse. And what's funny about this is people always say it happened overnight. Just like they will say, oh, this revolution we're talking about happened overnight. But you can see it doesn't happen overnight. Nowadays, we're talking about video chats, digital money, immersive 3D worlds, virtual reality. All of these things were just science fiction when I was a kid. We didn't see it coming. And that's because we were not paying enough attention. We were not paying attention until we had no choice. They were right before us. See, we need to start paying attention, guys. We need to start paying attention. Let us stop being the majority of people. Let us stop being the majority. Because the majority of people never see the genius and the struggle behind disruptive technology. They don't. They just see the end result when it becomes useful to them. But by then, they become the market. And we don't want to continue to be the market. It's time to cross to the other side. Let us become early adopters. Let us become early adopters of technology. That is the best way to play an investment card. Let's become early adopters of technology. Okay? Now, let us quickly look at how did cryptocurrencies emerge? How did cryptos emerge? To understand the emergence of cryptocurrencies, we need to go back in time to take a lesson on the history of money and how the monetary system, as we know it today, has failed. But that's not the focus of this webinar. One thing is sure though, Bitcoin will change this current monetary system. Over 50 years old system, Bitcoin will change this system. Looking at the history of money and this monetary system as we have it today is a very interesting discourse. And I would like us to have a webinar on that because it will help you to make wise investment decisions. You understand why things are the way they are today, why inflation is hitting us so hard, why our currency is not having value. So if you're interested in this webinar, just indicate and let's fix a date and have this webinar. Now, what exactly are cryptocurrencies? A cryptocurrency is a digital currency that uses cryptography to secure transactions and create new units. If you are looking at cryptocurrencies and trying to understand money, money is one of the most confounding concepts on earth. Because some people ask, how is crypto money? The concept of money itself is is very confounding. We all use it We all use money, but who truly understands it? The truth is, money can be anything. In the past, different kinds of stuff have been used as money. In essence, all you need is something that makes it easier for people to transact business with one another. Take the Naira, for example. Nothing is backing it. And this concept of money not being backed up by anything started with the US dollar when the US went off the gold standard. Then money was being backed up by gold. So all the Naira or the dollar is right now is just a promise, an act of faith. We're all acting on faith that by accepting these small pieces of paper we call money, we will in turn be able to use them to buy other stuff in the future. A cryptocurrency, which we sometimes call digital currency, is no different. It's simply internet-based money. And like any other medium of exchange, many people around the world have decided it is money. Today, people use cryptocurrency to buy stuff and also pay for services. That alone makes it have value. How does it work? Now, this is where you can get a little fuzzy, you can get lost trying to understand the technicality, involved in how cryptocurrencies work. But you see, for me, I take it like, for most of us, we drive cars, right? But how many of us understand the finer details of how an engine works? We just drive the car. If it takes you to your destination, that's all you want. You see, I just mentioned that cryptocurrencies are now used to pay for goods and services. Let me quickly add in some locations. And that's what matters. It works. That's all that matters. But let's just try to understand it from the periphery. Cryptocurrencies work thanks to something called a blockchain. A blockchain is nothing more than a very secure online database. Now, cryptocurrencies are computer codes that can be used to transfer things of value. This transaction takes place over the blockchain, which is essentially a public ledger. Now, let's use something that we know and try to understand this. Let's illustrate with something that we're familiar with. It's similar to one bank sending money to another bank. They use ledgers to track the transactions. The difference is the blockchain is a decentralized ledger. So the transaction is tracked over multiple computers. Some currencies, like Bitcoin, are used as money, as a medium of exchange. Others are similar to equities. The main difference between cryptocurrencies and traditional currencies is that cryptocurrencies are digital and use cryptography. That's just the main difference. We're dealing with the future here. We are dealing with the future. This technology is the future. We live in a modern age with all types of technologies. But let me shock you. Do you know we are still using obsolete methods to make payments? Today, we are still using obsolete methods to make payment. And it's costing us several billion per year. And this dates back to the Roman Empire, where bankers would transfer money via what we consider today as paper checks. According to a survey rather, in 2019, thereabouts, paper checks still make up 42% of all business payments. So we are sending approximately $26 trillion per year through a system that was invented 2,000 years ago. Can you now just imagine the cost associated with this? It is huge. And it is estimated to be around 550 billion per year. The cost is estimated to be 550 billion per year. So now, what are the problems with the way we handle money as a society today? What are the problems? Is it okay? Should we continue, or we just can't keep doing things this way? We have to change. What are the problems? For one, the way we handle money in our society today is inefficient. It takes days to verify transactions, and mistakes are made in the process. Second, money can be counterfeited. Now, what is the evil in counterfeiting money? Counterfeit currency reduces the value of genuine currency, and this leads to inflation and potentially destabilizes economies. In 2020, the US Secret Service confiscated more than $500 million in counterfeit money. And we're not talking about credit card fraud and check forgeries, just counterfeit money. But you see, cryptocurrencies solve these two major problems using the blockchain. And that was why cryptocurrencies came into existence in the first place. Some people were just tired with the current monetary system, and they just had to do something about it to fix these problems. And these two problems we have identified, cryptocurrencies solve these problems. Now let me explain how it works. When you go to the bank and withdraw money, the teller checks the bank's electronic ledger to see your balance. Once the teller sees that you have enough money to withdraw, he or she gives you your money and changes the ledger to reflect the withdrawal. If you immediately go to an ATM at a different bank, you'll see that the ledger has already been shared with the other bank. This is called a closed ledger system. Only other banks and payment networks can view this ledger. The blockchain works similarly, but the ledger is public and online. Identities are kept anonymous in this system, but all transaction details can be seen by everyone. The blockchain is maintained by thousands of independent computers across the world. So it's not a central system. It's not one warehouse somewhere hosting servers. It is thousands of independent computers across the world. Now, these computers are constantly talking to one another, comparing data to make sure the ledger is valid. This prevents double spending, the same way banks prevent double spending. Now, even though the blockchain is a decentralized system like this, it is even better because it is unhackable and impossible to shut down, because there's no central server, no central server anywhere. Being unhackable means no one can tamper with the information on the blockchain. You cannot change it, you cannot alter it. And because the blockchain uses cryptology, that is a secure form of communication, it's also difficult to counterfeit currency. So this increases trust. It creates and increases trust without needing a central authority or a middleman. And you see, when you cut out middlemen, You cut out lots of costs. This is already changing the face of money transmitting business. It's already changing the face of money transmitting business. Now, let's take examples. Now, you can send money in any currency to any place in the world that has an internet connection for 99.9% less than it costs to send money by Western Union. The recipient will receive the money immediately, paying 5 to 10% of the money you send in a wire transfer and waiting 7 days for that money to clear would be a thing of the past. In a few years, you'll be able to buy a home without having to spend a fortune on title documents. The blockchain can do that in seconds. Now, I personally believe many fortunes in this field will be generated from the underlying blockchain technology itself because of the potential savings and future profit opportunities promised by blockchain technology. If you look at the banking sector alone, you see industry giants like JP Morgan Chase, Barclays Bank, and so many others pouring billions of dollars into developing financial applications that use blockchain technology. JP Morgan publicly announced that it will invest $9 billion in blockchain technology. Now, this movement to blockchain is all about money. A blockchain-based financial system can virtually eliminate fraud, can eliminate delays in payment and trade errors. Hundreds of billions of dollars are at stake here, and that is just in the banking sector. That's just in the banking sector. And many people make the mistake to try to explain blockchain in terms of the new internet. You must have heard people say blockchain is the new internet. But you see, the problem with this analogy is that we are using old technology in an attempt to define an entirely new paradigm. We don't even have the terminology to explain the future period, much like they didn't have it at the birth of the internet age. But it is very important to understand that the blockchain is not only about money and payment. It is very important to understand that blockchain technology is not only about money and payments. It's not only about money and payment. And this will bring us to the second largest cryptocurrency by value, Ethereum. Ethereum is an innovative new cryptocurrency that was created by Vitalik Buterin in 2013. Ethereum is its own ecosystem, just like Bitcoin. It has its own ecosystem, but there are differences though between the two. For one, Ethereum is a development platform that people can build upon. It's similar to the operating system developed by Apple, that is iOS, to run apps on its products. The network, the Ethereum network, the design of the Ethereum network is different from Bitcoin. Ethereum is designed for developers to build upon, but with a unique angle. Any program built on the Ethereum network must spend Ether. Ether is the currency of the Ethereum ecosystem. So for you to run any program on the Ethereum network, you must spend Ether. And this does two things. Why is this important? for two things. It prevents malicious or non-productive use of the system. And secondly, the more the system is used, the more demand it creates for Ether, the native currency. So basically, the value of Ether is based on the law of supply and demand. It's based on the law of supply and demand. The more the system is used, the more demand for the currency is generated. And that is exactly how currencies are supposed to work. Demand and use drives the price. Like Bitcoin, Ethereum is a decentralized platform that runs smart contracts. Decentralized applications, which we also called dApps, are built on top of the Ethereum platform. Each decentralized application runs exactly as programmed, without any possibility of downtime, censorship, fraud, or third-party interference. These applications run on a custom-built blockchain, and the blockchain is a shared network that can move value around and represent ownership. Smart contracts are a very important part of the Ethereum network, and they are only executed when pre-specified conditions are met. They can only be executed when pre-specified conditions are met. And the blockchain automatically enforces the terms of the agreement. Let me give an example here. Today, if you want to sell your house, it will require a lot of paperwork, legal agreements, and fees. It's a slow and expensive process. A slow and expensive process. Ethereum's goal is to turn that lengthy process into a digital transaction, recognized and verified by the blockchain. That will make the transaction faster and more secure. Third parties wouldn't have to get involved, and that would save significant transaction fee. This is just one type of transaction. This is just one type of transaction we've looked at. The possibilities are limitless. Limitless. Ethereum will do for any programmable product what Bitcoin did for money and currency. And some people believe Ethereum could spell the end of bureaucracy, creating trust and transparency among governments, institutions, corporations, and even individuals. It will be as easy as sending an email. As easy as sending an email. And as more developers build more decentralized applications for the Ethereum network, the price of Ether will rise higher. And we're beginning to see a lot of interest from major institutions towards the Ethereum network. The Wells Fargos of this world, the Barclays banks, HSBC, name them. A lot of interest. And this is very exciting. It is very exciting for us because it shows adoption. When the big players begin to come in, it shows adoption. It's not only the banks. It's not only the banks that are showing this interest. Even tech giants have also joined in. We have the likes of IBM, Samsung, Microsoft, all recently setting up partnership with Ethereum founder. Google has been tracking Ethereum for quite some time. And just recently, one of its algorithms indicated a major spike in the currency's popularity. So what are the benefits of Ethereum blockchain? We need to understand this so that we can understand why one needs to look at investment in this area. You see, Bitcoin is essentially a payment system, and it uses the blockchain to register those transactions. Today, it's gradually being viewed as a store of value also. Vitalik Buterin, the founder of Ethereum, recognized that if you could make payment transactions using blockchain software, you could make any type of transaction if you wrote the proper code. And that's where Ethereum comes in, and why so many banks are interested in the network. The Ethereum founder created a program that could create customized transactions based on each developer's needs. In other words, you could write real estate and insurance contracts, mortgages, and even stock purchases using Ethereum, all without a middleman. You don't need a lawyer. That's one reason Ethereum is distinctively different from Bitcoin. Two other areas Buterin wanted to improve were speed and security. It takes more time for a Bitcoin transaction to go through than an Ethereum transaction. So those are other areas they look to improve upon, speed and security. But the truth is, Ethereum will do more than make money move faster and safer. It will make all types of business transactions faster and safer. I'd earlier mentioned that Bitcoin was designed solely for payment. It was designed, that was the initial design, was designed solely for payment. It was never designed to handle massive amounts of complicated transactions. But Buterin's solution is more than just a new currency payment system. It is an operating system that supports complex computer programs. Other developers can build software applications on Ethereum to fix payment problems and inefficiencies. Big banks are spending close to $1 billion per year testing this new technology. Virtually all of them are testing Ethereum. Virtually all of them. Why are the banks picking on Ethereum? What is the interest? Because Ethereum promises to smooth out these transaction problems and bring payment processing costs down. That means these giant corporations could save billions of dollars by adopting the blockchain. That's why Ethereum holds the promise of a whole new way to conduct global business. And it is no surprise that businesses have also chosen Ethereum network. They've chosen Ethereum network because it is an operating system, just like Android or Microsoft Windows. Developers write programs that run on the Ethereum system in much the same way they do for Windows or for apps that run on Android phones. Ethereum is different. It's different because it's an operating system for the blockchain. Ethereum is an operating system for the blockchain. If you know what Android has done to smartphones, if you know what iOS has done to smartphones, if you know what Windows did for applications, you understand what it is we're talking about. So instead of having to create your own blockchain, you can just build programs on top of Ethereum's blockchain. You don't need to build your own blockchain. And this makes rolling out a blockchain application much faster and cheaper than building an entire blockchain network from scratch. That's why banks, brokers, insurance companies, and even exchange officials are so excited about Ethereum. They don't have to invest in a vast network of distributed computers. They also don't have to create their own programming language. All they have to do is build whatever application they want and run it on the Ethereum network. The beauty of it all is anytime Ethereum technology is used, the currency attached to the Ethereum network has to be used. Don't forget that. So it creates a natural demand for Ether, and that demand drives up the price of Ether. Now, let's go a little deeper. Ethereum, like Bitcoin, is mined. That is the process by which new Ethereum or new Bitcoin is brought into supply. And whenever this mining activity takes place, the miners will receive Ether in exchange for verifying transactions. Just think of it as an incentive that's been given to the miners to keep the network as decentralized and as secured as possible. It is my belief that the Ethereum network will become the global operating standard for virtually all blockchain applications, in the same way that Windows became the global operating standard for personal computers. And as the system catches on, more people will use Ether to conduct transactions. As adoption moves from the early stage to the latter stages, we'll see more people using Ether to do transactions. And this will boost its price. It will boost its price. Let me shock you. Microsoft is doing a lot of work on Ethereum. Microsoft. 30th of March 2026, Microsoft announced that more than 3 million of its developers would have access to work on Ethereum through its Windows platform. This is huge, guys. And guess what? Ethereum blockchain as a service is now available on Microsoft as well. And Microsoft is also looking at using the Ethereum blockchain to combat digital piracy. If you know how big the problem of digital piracy is, and Microsoft is looking at Ethereum blockchain to combat that, that is massive. That's massive. I tell you, Ethereum is developing a cult-like following among the tech savvy. For those of us who are not tech savvy, we may not know, and that's why this information is coming out to us. Ethereum is developing a cult-like following. Just like what happened to Steve Jobs' Apple's products. We had a lot of developers coming to, work on Apple's products because of the way the platform was designed to enable developers develop on top of it. I know all of this information is overwhelming and you're thinking, oh, but we're late. Don't be overwhelmed. Don't make the mistake. Think that it's too late to get in. There's still plenty of meat left on this bone. Still plenty of meat. Remember, Bitcoin went from pennies to $17, then exploded all the way up to $3,000. So there's a lot more room to go in Ethereum. In fact, one emerging buyer is Wall Street. According to the New York Times, Michael Novogratz, who managed 2.3 billion at Fortress Investment Group. That's no small money. You'll know this is a big hedge fund manager, 2.3 billion. He has made a significant purchase of Ethereum. And we have statistics that 7 other billionaires have also been identified to be buying Ethereum. They are in a buying frenzy. But Ethereum is just 9 years old, remember? And it already has the world's largest banks and software companies lining up to work on it. Ethereum is the second largest cryptocurrency in the world now. But will it remain like this for long? Many believe it will topple Bitcoin. Let's see how it goes. But before we dive into the specifics of the essence of this meeting, let us zoom back out a little and look at the big picture so that you can have a better understanding of what is about to happen. Let us look at cryptocurrency countdown events. What do we mean by cryptocurrency countdown events? And what are their significance? We'll start with the gateway to cryptocurrencies, Bitcoin. And I will explain without getting too technical. You see, Bitcoin has been designed in such a way that there can never be more than 21 million Bitcoins in existence. Never. Their issuance is strictly regulated by computer code. Every 10 minutes, Bitcoin miners compete to solve a complex mathematical problem using computer and computing power. Now, in the first half of 2020, whoever solved the problem first was awarded 12.5 Bitcoins. Now, what is the halving event? A halving event is when the Bitcoin reward gets cut in half. So each halving reduces supply coming to the market every 4 years. Each halving reduces supply coming to the market every 4 years. The first Bitcoin halving occurred in 2012, and the second in 2016. The third occurred in 2020, May 11, 2020. Now, when that halving event occurred, the Bitcoin reward dropped from 12.5 to 6.25 Bitcoins. Over a year, that dropped the supply of Bitcoin coming to the market. It dropped the supply. So this halving event dropped the supply coming to the market. Now, why is this important? We may ask. Why is this important? Bitcoin is the gateway to crypto. Think of it like the reserve currency of the crypto world. So if demand stays the same, but supply gets cut in half, what happens to the price? What happens to the price? It goes up. And when demand skyrockets, it goes up even further. Now, we've seen this multiple times with Bitcoin halvings. If you go back to just before the 2016 halving, Bitcoin was trading for around $222. Leading up to that supply cut, it soared 203%. But after the supply cuts, over the next year, Bitcoin continued to soar all the way up to $19,000. Just imagine if you had invested in Bitcoin before the halving at that point, you would have been sitting on over 8,600% return. Over 6,800, over 8,600% return. Now that turns every $500 into $43,000. But let's look at the other side of it. If you had waited until after the Bitcoin countdown date, you would have only made about 2,800%. Your 500 invested would have given you over $14,000, which is still an amazing return. Still an amazing return. But you'd have made almost 3 times more by getting in before the countdown, before that halving event. The same story played out with Bitcoin's most recent halving in 2020. Before the supply cut on May 11th, Bitcoin traded for around $3,900. Now, leading up to the supply cut, it soared 117%. But after the supply cut hit, over the next 1 year, Bitcoin continued to soar all the way up to $63,000. That's a 1,490 something percent return. Enough to turn every $500 into $7,900. And again, if you had waited until after the supply cut, you would have only made 550%, which is still great. But this just illustrates how important it is to get in before these countdown events occur. Now, here's the thing. When these supply shocks happen, it's not just Bitcoin that soars. We've also seen multiple other altcoins soar along with it. Altcoins are coins, anything other than Bitcoin is referred to as an altcoin. So Ethereum and the others are called altcoins. When Bitcoin price soars, we've seen some other smaller currencies also shoot up in price. That happens over and over and over. And the statistics are amazing. In 2016 halving, we had some other cryptos that went up as high as 8,600%, some as high as 11,600%, and some as high as 50,000%. Crazy. You can only find these results in crypto space. Only in the crypto space. And that happened again in 2020 after the Bitcoin halving. We saw other currencies shooting as high as 561, 4,000 plus, and over 15,000%. Now, the bad news is Bitcoin's next halving isn't until 2024. So don't be waiting for, oh, when will the next halving be? With this information, let me get in before the next halving is not until 2024. But this webinar, of course, is not to share bad news for us. We've got plenty of good news for you. And the good news is there is another crypto with its own special countdown event happening soon. And guess that crypto. Guess that crypto. Of course, you know what it is. Ethereum. If you position yourself beforehand, the gains in this particular event I'm about sharing with you would potentially be higher. Will be higher. So, looking at Ethereum's own countdown events, I believe that over the next decade, Ethereum will count itself amongst the world's most valuable financial assets. And that will be partly because of its own countdown events. An expert has predicted that Ethereum will likely be more valuable than shares in Facebook, Amazon, Apple, Google, and even Microsoft. As we earlier discussed, the next stage of transformational software development will happen on the blockchain, not the traditional internet. And Ethereum is the world's most widely used blockchain development platform. Just like Microsoft was the world's most popular PC development platforms in the 90s, and Google's Android and Apple's iOS are the most popular mobile app development platforms today. Ethereum is and will continue to be the go-to platform for blockchain projects. Over the long term, I think we could see Ether reach 25K per token. That might be several years away from now, but we could see that happen. While I don't expect that anytime soon, though, I believe we will see Ethereum reach a market capitalization of $1 trillion soon. Why will that happen? Why do we think this can be? For one thing, demand for Ether is skyrocketing. Ethereum alone hosts over 2,500 applications. Ethereum hosts over 2,500 applications. That's the most of any blockchain. And roughly 2,300 active developers working on the Ethereum network. The closest competitor is nowhere near. Nowhere near. The abundance of developers and apps on Ethereum has created a network effect that attracts even more projects to Ethereum. Any blockchain app built on the Ethereum network can plug into Ethereum's liquidity, lending, and borrowing. And the developers understand this, and that's why they keep flocking to Ethereum, despite some challenges here and there. Ethereum is acting like a vacuum cleaner, sucking up more and more projects into its ecosystem. And we're seeing demand skyrocket. We're seeing demand skyrocket. This increased demand we are seeing is showing up in Ethereum's native token, Ether. The number of daily transactions on the network recently reached a record high of 1.7 million. And as more and more users compete to use the network, fees sent on these transactions also reached a record high of 70 million per day. But here's the thing. All this demand is coming at a time when we are about to see a major reduction in the incoming supply of Ethereum, thanks to the new upgrades being done. And when demand increases while supply decreases, prices have nowhere to go but up. So what is this upgrade all about? What is this upgrade all about? This upgrade we're talking about has to do with Ethereum transitioning from a proof of work protocol to a proof of stake protocol. Like I've said, I don't want to make this webinar technical. I just want to explain things as simple as possible so that everybody can understand this thing. But let's just know that the proof of work or the proof of stake is just the ways that this network is, kept secured. It's a way of validating transactions, and Ethereum network is now shifting from proof of work to a proof of stake. In the proof of work, miners mine and validate transactions on a block by solving complex mathematical, problems. And like we said with Bitcoin, the same with Ethereum, the first miner who solves the problem earns the block reward. Meanwhile, the proof of stake does not go through the same process. In this protocol, miners validate transactions by staking tokens on a block. The network chooses the miner who earns the reward based on the number of coins they own and some other factors. Now, since the proof of stake network doesn't rely on warehouses full of mining equipment, they are less expensive to run. So these networks can issue far fewer tokens to reward miners for securing the network. Ethereum is in the process of switching to that proof of stake model. And when it finally completes this transition and merges, when it completes this transition and merges, its proof of work, its proof of work network and its proof of stake model will be merged. When this happens, we'll see as much as 90% reduction in the amount of new Ether coming into the market. That is a reduction as much as 90% in the supply of Ethereum into the market. And when you combine all of these factors, that makes Ethereum a must-own crypto. And this merge has already been tested. It has already been tested in the Keen Merge testnet, which happened on the 15th of March, 2020. The mainnet running the proof of work and the Beacon net and the Beacon chain running the proof of stake were run side by side. That has happened, and that is expected to be the final test of the merge before they will completely shut down the proof of work protocol and move to the proof of stake. I had mentioned that Ethereum will easily become the next $1 trillion network in terms of market capitalization. And it's a no-brainer. That's because of the next stage. That's because the next stage of software development will happen on the blockchain. It's a no-brainer. And Ethereum, like we know it, is the world's most widely used blockchain development platform, much like Microsoft, Google, and Apple. Now, these three companies I have mentioned, they are all worth more than $1 trillion today. That's not a coincidence. With traditional internet and mobile app technology reaching a saturation point, it's almost inevitable that the next boom in application development will take place on the blockchain. The network that will dominate that future is what? Ethereum. It's on the pathway to become the fastest asset in human history to hit a 1 trillion valuation, even faster than Bitcoin. And after the final countdown, Ethereum will become a deflationary currency. Very key. Ethereum will become a deflationary currency. So there will be fewer tokens in circulation. And when that happens, well, it makes each of those Ether more valuable. To make sense of all of these, let us look no further than the revenue it generates from transactions fees. How can this be made possible? How can this be made possible? Let's look at some estimations. Now, in 2020, Ethereum generated roughly 600 million in transaction fees. Roughly 600 million in transaction fees. In 2021, Ethereum generated nearly 5.6 billion in transaction fees. And that's an increase of about 830%. So it grew about 830% between 2020 and 2021. Now, let's assume in 2022, Ethereum grows at just 1/10 of the rate it has so far in 2021. That would imply nearly 862 million in monthly transaction fees, or 10.3 billion annually in transaction fee. To get a sense of what that 10.3 billion in transaction fee revenue means for Ethereum, we can now compare it to the likes of global payment processing giants, Visa and MasterCard. These two companies trade at an earning multiple of 49. Earning multiplier is a valuation tool to compare the share price of a company with that of similar companies. And Visa and MasterCard are trading at an earning multiple of 49. If we apply the same earning multiple to Ethereum, it will be valued at roughly 507 billion. But since Ethereum is on the cutting edge of technology with a higher growth potential, we believe Ethereum will fetch a premium at least 3 times greater than what Visa and MasterCard is doing. That would translate to a market capitalization of 1.52 trillion for Ethereum. Or if you want to look at it in token terms, about a token could go for about $12,888. But as you know, this transition to proof of stake will see a super halving. Look at what happens to Bitcoin whenever there is a halving event. This transition to proof of stake will see a super halving, making Ethereum a deflationary asset. This is because more tokens will be burned from transaction fees than tokens being emitted into circulation. Now, look at this. Roughly 8,000 ETH are burned each day from transaction fees today. Roughly 8,000 ETH are burned. And roughly 12,800 ETH are issued to compensate miners. But once this transition happens, once ETH 2.0 goes live, only about 2,700 ETH will be issued each day to compensate validators. That's those that will stake their tokens. That means roughly 5,300 ETH will be burned each day, assuming every other thing remains constant. That means we could see roughly 1.9 million ETH burned each year following Ethereum's switch to the proof of stake. That is an 8.2% reduction in total supply by the end of its 5th year. That alone can change everything for Ethereum. That alone can change everything for Ethereum. So let us make sense of this. Now, if we're having a reduction in this magnitude, we could see Ethereum rise, we could see Ether rise to 14K without moving the needle of its overall market capitalization. That would make it about 255% gain from current prices. And to be honest, that's a conservative estimate. As this improvement we are talking about on Ethereum could cut its new supply even further by as much as 90%. Now, everything being equal under a blue sky scenario, we could even see Ethereum reach 25K in the coming years. That would be over 500% gain. It is possible. We've seen other cryptos do this. Friends, you still have a chance to get in on the ground floor of what will become the most valuable financial asset in the world. Seize this opportunity. Seize this opportunity and take action. Seize this opportunity and take action. Now, I will leave us with a bonus because you have stayed to this point in this webinar. I will leave us with a bonus. And the action I want you to take today is to buy Ethereum. Prices are down right now. It's a good time to buy Ethereum. If the prices go down lower than this, dollar cost average, $200, $400, $500 worth, $1,000 worth of Ethereum. Just buy, own some Ethereum, own some Ether. Now, my bonus pick for you is something that is beginning to gain traction. And if you have been following the crypto events in the crypto space, you know that Coinbase is the largest crypto exchange in the US. Coinbase went public recently, and it ended its first trading day with an 86 billion market cap first day. That makes Coinbase larger than many household names in the financial services industry, including the SME Group, Discovery Financial, and even the operator of the New York Stock Exchange, Intercontinental Exchange, which we popularly know as IC. I believe, and many other people also believe, that we could look back in the future at Coinbase going public as the Netscape moment for crypto. Some people believe we have still not gotten to that moment. Some believe, Coinbase is the Netscape moment for crypto. Now, for those of you that don't know, after Netscape went public in 1995, the internet literally exploded in popularity. And by the end of 1996, the number of internet users had skyrocketed to 36 million, an increase of about 125%. And 5 years later, the internet had 500 million users. Remember when we started this webinar, I told you 30 years ago, there was nobody on the internet before Netscape came in 94 and the IPO came in 95. Boom, everything went up. Now, just as Netscape IPO took the internet into the homes of every ordinary person, so too will Coinbase's IPO. But Coinbase is just the beginning. The best opportunities this year are in a different corner of the crypto market, and it's called decentralized finance, or DeFi for short. You see, Coinbase is a centralized exchange, While it makes it easy to buy, sell, store cryptos, it has its pitfalls. The two largest are its high fees and the risk of letting Coinbase custody your assets. And that's where DeFi comes in. Under DeFi, platforms like exchanges are decentralized. They allow users to trade cryptos at a fraction of the cost and maintain control over their assets also. Now, over the past year, in 2021, we saw hundreds of DeFi projects come to life. Projects that have built an entire ecosystem of financial products. These new platforms are set to disrupt the financial industry. They will do that by removing intermediaries and barriers to entry. This will lower costs. DeFi is set to improve areas like lending, borrowing, trading, insurance, asset management, and more. And as crypto adoption becomes more mainstream, DeFi will, continue to appeal to adopters, and we begin to see the advantages over traditional finance. It is expected that DeFi will evolve into a multi-trillion-dollar sector, and yet it's still flying under the radar of most investors. So today, I give you two of my picks for free. Haven't made it this far in the webinar. The first one is ZRX, and the second one is Compound. These two assets are in the DeFi space. ZRX is under $1. Under $1 as we speak. Compound is a little above $100. So these are my free picks for you. Get Ethereum, get ZRX, get Compound. Prices are down right now, and watch these things explode in the coming years. When you get them, you can stick them. You don't have to put them in your wallet, for them to just remain idle. You can stick them and earn interest on them. So I want to thank you for being part of this webinar. And you can follow me on Blockwise Infoverse channel for more insights like this, crypto news, Forex news, insights on online investments. Just like our page and follow so that whenever we post new contents like this, you'll get, to get them first. Thank you very much, and we'll do this again.